Liability insurance matters most when someone says you caused harm. A guest slips at your home, your dog bites a neighbor, your car hits another vehicle, or your business damages a client's property. Suddenly, the question is not only what happened, it is who is financially responsible for the injury, repair, legal defense, or settlement. Liability insurance is coverage that helps protect you when you are legally responsible for harm to another person or their property. It does not usually pay for your own injury or your own damaged belongings. It is designed for claims made against you by someone else. The basic idea is risk transfer. You pay a premium so the insurer takes on covered liability risks up to the policy limit. If a covered claim happens, the insurer may pay damages, legal costs, or settlements according to the policy. The exact protection depends on the type of policy and exclusions. Liability coverage appears in many policies. Auto insurance has liability coverage for injuries or damage you cause while driving. Homeowners insurance may include personal liability if someone is injured at your property. Business insurance may cover customer injuries, property damage, or professional mistakes. Bodily injury liability deals with harm to another person. In a car accident, this could include medical bills, lost wages, and legal claims from the injured driver or passenger. In a home setting, it might involve a visitor who falls because of a dangerous condition that should have been addressed. Property damage liability deals with damage to someone else's property. If you crash into another car, damage a rented apartment, or your business breaks a client's equipment, this part may respond if the claim is covered. It protects against costs that can be much larger than the original mistake. Legal defense is a major reason liability insurance matters. Even if a claim is disputed, lawyers, court filings, expert reviews, and negotiations can be expensive. Many liability policies include defense costs, but the details matter. Some defense costs reduce the policy limit, while others may be handled separately. Policy limits set the maximum the insurer will pay. If your limit is $100,000 and a covered claim costs $300,000, you may be responsible for the remaining amount. This is why choosing liability limits is not only about the cheapest premium. It is about the size of financial loss you could survive. Some liability policies have deductibles or self-insured amounts, especially in business settings. That means you pay the first part of a claim before insurance responds. A lower premium with a high deductible may make sense for some people, but only if they can afford that upfront cost when something happens. Exclusions are critical. Liability insurance usually does not cover intentional harm, criminal acts, certain business activities under personal policies, contractual promises beyond normal liability, or specific high-risk situations. A homeowner should not assume their personal liability coverage protects a side business unless the policy says so. Imagine a loose step at a house. A visitor falls, breaks an ankle, and claims the owner knew the step was unsafe. Personal liability coverage may help with medical costs, legal defense, or settlement if the policy covers the incident. Without coverage, the owner could face the claim directly. In auto insurance, liability coverage protects others when you cause an accident. If you damage another person's car and injure the driver, your liability coverage may pay up to the limit. It does not repair your own vehicle. That would usually require collision coverage. Business liability is wider because customers, vendors, employees, products, and advice can create claims. A cafe may need coverage for a customer slip. A contractor may need coverage for property damage. A consultant may need professional liability if advice causes financial loss. The right coverage depends on the work. Umbrella insurance adds extra liability protection above underlying policies. It can be useful when someone has assets, savings, rental properties, teen drivers, or higher lawsuit exposure. The umbrella does not replace basic coverage. It sits above it and can respond when a covered claim exceeds the lower policy limit. A liability claim usually begins with an incident, notice, documentation, and insurer review. The insurer may investigate what happened, whether the policy applies, whether the insured was responsible, and how much the claim is worth. Good documentation helps because liability often depends on facts, timing, photos, witnesses, and records. People should be careful about admitting fault too quickly after an incident. Showing concern is human, but legal responsibility can be complicated. Policies often require prompt notice and cooperation with the insurer. Letting the insurer investigate protects both the insured and the claim process. Being underinsured is a common risk. Someone may buy the minimum required auto liability limit to save money, then cause a serious accident that exceeds the limit. Minimum coverage may satisfy the law, but it may not protect personal finances from a large claim. A practical review starts with exposure. Do you drive often? Own property? Host guests? Have a pool or dog? Run a business? Rent out space? Give professional advice? Each exposure can change liability needs. The right limit depends on what could realistically go wrong and what assets need protection. Liability insurance is not about expecting the worst every day. It is about recognizing that accidents, mistakes, and legal claims can be financially larger than the event appears at first. The coverage creates a financial backstop when another person says your actions caused their loss. A home example shows the difference. If a guest slips on a wet staircase and claims medical costs, liability coverage may become relevant. The damaged staircase itself is a property issue. The guest's claim against you is a liability issue. Mixing those two can lead people to misunderstand what part of the policy responds. Auto liability works in a similar way. If you cause a crash, your own car damage is not the main liability question. The liability question is what you owe the other driver, passengers, pedestrians, or property owner. That can include medical bills, repairs, legal costs, and sometimes settlements. Liability insurance also has limits. If a claim is larger than the limit, the uncovered amount may still be a personal problem. That is why people with homes, savings, businesses, or higher exposure often pay attention to higher limits or umbrella coverage. The danger is not the ordinary accident, it is the unusually expensive one. The best time to understand liability coverage is before anyone is angry, injured, or hiring a lawyer. Read what situations are covered, what activities are excluded, and whether business use, rentals, pets, vehicles, or household workers change the risk. Liability often becomes important only after a normal day turns into a demand for payment. A small business example makes this practical. If a customer trips over a loose mat in a shop, the owner may face medical costs, legal letters, and pressure to settle even if the accident was not intentional. Liability coverage is designed for that kind of claim from someone else. The most important thing to remember is that liability coverage protects against claims from others, not every loss in your own life. Read the limits, exclusions, and situations covered. A policy that looks ordinary on paper can become extremely important on the day one accident turns into a legal demand.